Alright, so in this video we'll be looking at sponsor candles, order blocks, and mitigation. Alright, now what is a sponsor candle? A sponsor candle is a candle that takes out liquidity, right? So it's just a candle that takes out liquidity, or it grabs liquidity. Remember in the previous video when we were looking at liquidity, we said that liquidity can be found at equal highs, equal lows. Liquidity can be mitigated from another order block or from an inefficient area, right? So in this video right here, we have a equal high, right? So if liquidity is found at equal highs, and liquidity is basically money in the form of stop losses and orders, etc., that means that we would have a pool of liquidity above this area, right? So let me label this as liquidity. All right, so this is liquidity per se, right? Because this is an equal high, right? So normally what would happen is that the institutions would actually push the market to the upside, right, to actually take out that liquidity. So what this means is that the bigger institutions dump money into the market, basically their own money. So they add buy positions right here to actually take out the liquidity and actually induce buyers, right? And then what happened? The market turned the opposite direction. Cool. So in this case, that means this candle right here would be classified as a sponsor candle because this was the candle that induced buyers and takes out liquidity, right? So this right here would be the SC, sponsor candle. And note, I said this candle only, right? This candle is a sponsor candle because this is the one that takes out liquidity. Now normally after we have a sponsor candle, we have a violent move in the opposite direction. I call this the confirmation candle, and we'll get to that, right? So this is my confirmation candle. Now what does this confirms to me, right? This confirms that this move was a manipulation because right after the market took out this liquidity, we have the market went in the opposite direction very violently, right? So to me, this now becomes a buy to sell move. So the banks bought the market and then sell the market. So the move was intended to just take out liquidity and induce buyers. Now when we see this happen, this buy to sell, we know that the institutions are in the market because they are the only one that has the power to actually manipulate the market like this. And that is when we generally want to get into the market. We want to get in with the banks, right, or the bigger institutions, because then the market will be more liquid. So we have the market moving a lot of distance faster because more money is in the market, more money is present in the market, right? So this entire move right here is called a, when I see this is a buy to sell. Buy to sell. And it would be vice versa if we were to look at the market in an uptrend. If the market was supposed to go in an uptrend, sorry. So yeah, so this is a buy to sell move. Now Now this entire move right here, the sponsor candle plus the confirmation candle, gives us what is called an order block, right? Retail traders would call this a bearish engulfing, but this is an order block. Reason being is that there are two positions open right here because institutions buy and sell the market at the same time, right? And these are what we use for our point of interest, because we know that price will return to these order blocks. Price will return to these order blocks so that the institutions can actually break even on their trade, right? So the market would push down most of the times. It can retest now though, right? It can retest immediately or it can retest after, right? But let's do one where the market came back to retest. All right, so this is the market. So the market pushed down right after this manipulation, and then this order block right here, let me label that. So this would be an order block. So the order block consists of the sponsor candle and the confirmation candle. So OB stands for order block, right? Before we get to that though, in order for a sponsor candle to be valid, it must takes out liquidity. So it's either it clear liquidity from a equal high, a equal low, or it grabs liquidity from another order block, or it takes liquidity from an inefficient area. Now that we know what order block is, which is this, we know that there is money here, and normally market come back to mitigate these order blocks in the market. So because we have this order block right here, because of the buy to sell, as I said before, the bigger institutions dump money into the market and then sell the market, right? So it was a manipulation. Have you ever wondered like why when you enter at say a double top, right, the market pushed in your favor and then take you out and then went in your favor, right? This is exactly what happens, right? Because there's liquidity above these areas and the market moved towards liquidity, so normally it's gonna take out that liquidity and then push in the opposite direction. Now how we'd enter based off these order blocks as our point of interest is that we highlight the sponsor candle, right? So when the market comes back, it can actually mitigate the sponsor candle. And when I say mitigate, mitigation is basically the market coming back to actually collect back the money from this order block right here when the institutions close their position, right? So when the market come back and then play off this order block, that is called the mitigation. So mitigation is nothing special. It's just a term used to describe the opposite move after the market comes back to this order block and play, or mitigates from an inefficiency, right? So it's just the market collecting money and moving in the opposite direction. That is generally mitigation, right? So when the market come back to this area, it can play the 0%, the 50%, 100%. It can play anywhere within the vicinity of the sponsor candle, right? Because they came back to close their position, and it can close anywhere once they reach where they actually bought the market, right? So we normally use 50% because 50% is really the average, right? The average of the sponsor candle. So that is why we use 50%, but it can play anywhere. So if we get a point of interest, say on the 4-hour time frame, we don't just take our entries when the market comes back, because what if you should take your entry here, look at this stop loss. This stop loss would be 74 pips, and we can't have that. So we just use these higher time frame order blocks as point of interest, and once price reach within that point of interest, we then go down on the lower time frame to look for market breaker structure, or market taking out liquidity again on the smaller time frame, creating order blocks, and then we take entries based off those order blocks on the smaller time frame, because our stop losses will be smaller. Now order blocks and inefficiency are just for entries, right? You still have to to correlate it with market structure. Market structure is key. So you want to take, or you want to look for these in like continuation of trends. So whether it be an uptrend or a downtrend, you don't just look for these in the market and just take entries like that. Yes, you can get a mitigation, but will the market move in that direction for a long time? Right? You have to look at trend also. You can't just use these to actually trade the market on a day-to-day basis. To you have to relate it with structure, right? Now let's let's actually look at some live example in the market. All right, so let's look at this order block here, right? Notice money got transferred or liquidity got taken from this order block. So this previous order block right here, we mitigated this order block and then created a new order block. Majority of the times when we have a mitigation, market creates a new order block, right? So we had an order block here, market came back to basically the 0% right here, and then we have a violent move in the opposite direction. So this right here would be our sponsor candle, right? This black candle here would be our sponsor candle because it was a candle that actually came down to take that liquidity, and then we have this violent move in the opposite direction. Also, we cleared liquidity from this equal low right here, right? And then market move in the opposite direction. So to get your entry, you'd highlight this order block right here. It can either be 50%, it can either be 50%, or remember, market can always retest the open of the order block, right? So let's find some more examples. All right, let's go to current price, right? I'll do another video on how we actually take entries on a day-to-day basis, as in going down on that lower time frame after we have a POI on a higher time frame, right? And going down on, let's say, the 1 minute time frame to actually take our entries within that point of interest. Or sometimes you can refine your entries on the 1 minute time frame and take entries off that, and I'm gonna show you how I did that with this trade, a trade that I actually caught this morning, right? So let's go to the 15-minute time frame first. So on the 15-minute time frame right here, right, I clearly saw that there was divergence right here, right? The market pushed up and broke structure, so which means that the market was in a downtrend, and now we broke a previous lower high. So now we are transitioning into a uptrend, right? Notice we had this area as our point of interest. You just see a wick right here and saying, why do I have a point of interest right here, right? But when you go down to the lower time frame, say the 1 minute time frame, what do we see here? Order block, right? And notice we had this push in the opposite, this push that cleared liquidity from this wick right here, right? So we cleared liquidity from that wick, and then market push in the opposite direction with a violent move, right? So this right now would be my entry once price tap back to collect to close their orders on this order block right here. That would be my entry, right? And notice how price came back and tapped the 0% and then went off. We're currently at about 70 pips in profit. So that's basically it for order blocks, sponsor candle, and confirmation candle, and mitigation. So as I said before, mitigation is basically just when the market comes back to collect that or to close that position, right, or collect money, and then we move in the opposite direction. So we say that market mitigated this area, right? So it's just a term, right? um just a quick recap. For say for instance, you have to be trading these in continuation of trend. You have to look at the trend, so you don't want to play an order block like this when we're in a downtrend. The only reason why I play a order block right here was because I saw a breaker structure. I know that now market wants to create higher low to push to the upside. So that was the only reason. So you have to correlate these with the current trend of the market. And remember, you have to a sponsor can order block is only valid when you have a sponsor candle that takes out liquidity, and then you see a violent move in the opposite direction. Most of the times that move should be breaking structure. All right, so I'll see you guys in the next video, which